Hi, my name is Rob Lamoureaux, and like you, I'm a paid-up Stansberry research subscriber. A couple years ago, my life completely changed. I certainly never expected it or sought it out. Never expected the invites to fancy parties or to see my own face staring back at me when I opened my favorite websites and emails. It all started with a viral video, which I'll show you in just a moment. It made me famous. Now, don't get me wrong. I'm not exactly getting calls from talent agencies. I'll never run for office, and I doubt I'll ever set foot anywhere near a private jet. I'm a completely unremarkable guy. But I did do something remarkable. I told the truth. The real, unvarnished, no BS truth of how I retired very comfortably at age 52 with just one straightforward investment technique. No special skills. No once-in-a-lifetime insight like loading up at Bitcoin 10 years ago or Amazon in 2005. Just a simple, repeatable technique that helped me and my family. You'll see what I mean in just a moment. You'll see me move to tears simply trying to tell my story and express my gratitude for what I had discovered. That's what made me famous. Now I'll leave it up to you to decide whether I deserve it, but I suppose I at least understand. Because look around. Look at social media, politics, celebrity culture, heck, even the way we treat our neighbors. We're neck deep in resentment, BS, and outright lies. I guess it's rare to hear someone speak from the heart. That's all I did. And as you'll see, I didn't leave anything out about exactly how I retired worry-free, at least a decade earlier than I ever thought possible. I know that's why my video took off. And it's why I'm in front of a camera again today in my home this holiday season. Now, I'm not asking anything of you except to watch and listen for a few short minutes. Try to set aside your cynicism, and in exchange, I want to give the full details of how I changed my life and show you a one-time only holiday bonus offer that I've negotiated for you with the folks at Stansberry Research, something they've never offered before. It's even better than the special offer that accompanied my original video, meaning this is the best opportunity you'll ever get to take action. It doesn't matter whether you've ever seen my face before or not. I promise you haven't missed anything yet. I'm not sure I'll be able to say that after next week. The biggest opportunity for this strategy in at least a decade is about to begin. But keep in mind, it's been paying me handsomely throughout the ups and downs of the last 2 years. I barely batted an eye when the markets fell by more than 30% in the spring of 2020. All I saw was opportunity. And since I knew this technique, I was able to take advantage. For example, when the energy sector was hit hard by the pandemic, I was able to make an investment in Comstock Energy without touching stocks or options that gained 49% in less than 5 months. That's 125% annualized. Eclipse Resources handed me a gain of 55% in the same time frame, 141% annualized. With Gulfport Energy, I saw an 81% return in just over 6 months, an annualized return of well over 150%. The travel industry was hit pretty hard too, but my investment in Wyndham Hotels needed less than 3 months to give me an 18% gain, 97% annualized. And in the wake of the shutdown, when it looked like no one would ever spend a penny for infrastructure again, I was able to make 4 separate investments in U.S. Steel, each one of which posted annualized gains between 67% and 80%. Again, this was all without touching stocks, options, crypto, or anything else you've likely considered, and without using leverage, shorting, or anything like that. Remember, I'm retired. The last thing I want is a bunch of risky investments that might or might not pan out. Now, all of this happened before the rare and massive opportunity the experts on this strategy at Stansberry are expecting in 2022. It's a short period of time when this approach can become dramatically more lucrative, perhaps as much as 5 times better based on history, while reducing risk. But I'm getting ahead of myself, because my message isn't really about any particular event in the markets, past or future. It's about telling the truth from the heart. That's all I ever wanted to do. Christmas, at least for folks as fortunate as I am, is about paying it forward and sharing your blessings as widely as you can. That's why I recorded this message today. I promise what you're about to see can completely change the direction of your life the way it did for me. And I couldn't be happier to show you the special treat I've arranged for fellow Stansberry readers this Christmas. something that's never, ever been available before and likely never will be again after this week. I hope you'll accept it, of course, but that's completely up to you. In the viral video you're about to see, I literally give away everything you need to know. I hope you'll at least consider saying yes to this special arrangement during the short week that it's available. This is how I stopped checking stock prices 4 times a day or even 4 times a month. It's how I earn consistent income and capital gains in every kind of market I've ever seen, good or bad. Now, I think when you see this, you may never buy another stock again. And if you don't agree, no problem. Just know that I'm sharing this with the utmost gratitude to the people that showed me how to retire early with no worries or extraordinary effort, and to you for listening. Thank you. My name is Rob Lamoureaux. I'm a paid-up Stansberry subscriber just like you. Through a strange series of events, I ended up at the Stansberry Research Studios in Baltimore shooting this short video for you. Don't worry, I'll explain everything. In a way, it started 2 years ago when I retired at age 52. Today, I live in a beautiful 4-bedroom house in upstate New York. I used to worry about mortgage payments. Not anymore. I've put 3 of my 4 children through private colleges, and I spend most of my time now planning vacations with my wife. Our next is a 2-week cruise to Hawaii. But please understand, I'm not here to brag. I don't think I'm special or even a particularly good investor. Over the years, I've made some of the worst financial mistakes you can imagine before I ultimately discovered one idea from Stansberry Research that changed everything. I'm going to share it with you right now, and I promise you, what I'm about to say is very different from anything you've heard before. Like I said, I'm a Stansberry reader, just like you. I don't work for Stansberry Research, and no, neither does my spouse, my high school buddy, or my cousin Tim. Nothing like that. Apart from processing my credit card, no one at Stansberry had ever even heard of me until a few weeks ago. Just recently, I read something that Porter wrote in the digest that shocked me. And for only the second time in my life, I sent in a feedback email letting the company know how I felt. What happened next was unusual, to say the least. I ended up talking to some very senior folks at the company, and I got them to agree to 2 radical changes, things they've never done before in the 20-year history of the company. First, they agreed to fly me here to Baltimore, hand over the mic, and let me speak directly to fellow subscribers, even though they might not like everything I have to say. The second step I'll tell you about in a moment. So please, hang around to the end of this short video. I think it'll surprise you big time. But before I go any further, I want to be clear about something. Porter Stansberry's research helped me retire at age 52. I owe him a tremendous debt of gratitude. But I'm not here to carry water for Porter or anyone else. I've spent weeks working on this video for one reason, to share with you the one idea out of tens of thousands of dollars worth of research that I read that's changed my life more than anything else. I want you to have the same opportunity I did to retire worry-free years ahead of schedule. But I'm going to tell you this story my way. See, I hate marketing messages. I hear from a lot of financial publishers. Maybe you do too. And if you're anything like me, you've grown skeptical of emails promising overnight riches or the next big thing in the markets that somehow manages to change nearly every day. One I got recently said I could triple my money every 72 hours. Do I look like I was born yesterday? I've seen them all and rejected most of them. And I know I'm not alone. That's part of how I got talking to Porter's team. They told me this has been readers' #1 complaint for years. I say, great. It's good to be skeptical. Don't get me wrong. I don't resent Stansberry for promoting their research. It's a business, I get that. And I think most of you do too. But with so much hype out there, it can be exhausting trying to figure out which idea can really help you the most. That's why I'm here right now. My only agenda here is to cut through the BS and tell you the one idea that's truly worked the best for me. See, I've had an Alliance subscription since 2008. I paid around 1/8 of what it would cost you today. But I'm not here to tell you to join the Alliance. I've got no business telling you to part with $30,000. Instead, I want to tell you about the one idea that helped me retire at 52. I give the company a lot of credit for allowing me to do this because, frankly, when you understand this one idea, there's a good chance you'll stop buying newsletters forever. This is a real, but virtually unknown investing strategy that anyone can use. In the next few minutes, I'll show you what it is, how it works, and how I've used it with my own real money. The very first time I did it, I made 321% in just over 3 years with an electronics company. But I wasn't betting on whether this company would come up with the next big thing or spotting some critical market trend. Instead, I did it in a way where my returns were all but guaranteed in advance. Oh, and I didn't track the investment basically at all. I'd maybe check in on the price once a month, mostly out of curiosity. It worked so well that I tried this strategy again, twice, with a major national retail chain. The first of those two handed me a 307% profit in 3.5 years. And the second one, I only made 295% in 3 years, but I'm not complaining. The returns definitely vary, and of course, past performance is no guarantee of future results. But two of my recent plays returned 72% and 36%, both in about a year, with none of the worry of the way I used to invest. I set these plays up in a few minutes a month and then basically forget about them until they pay me back on a specific schedule. Anyone can achieve those kinds of results. I can't stress this enough. I'm not a genius. And you don't have to be one either to ring the cash register the same way I have. That's why I call this strategy the answer. Because for me, it was the answer to pretty much every big question about retirement. Like, how can I generate a virtually guaranteed stream of income every year without ever having to work again? How can I grow my savings every year with very little risk of losing my nest egg in a market crash? I can't afford to lose anything at this stage of my life. In short, what's the best way to grow my money with the highest possible upside and the least amount of risk? I know those were my questions. And once I found the answer, they went away. Instead of worrying, I've been able to send 3 children to prestigious private colleges like Georgetown, Holy Cross, and St. Edward's. My 4th is starting at Cornell in the fall. I've helped my parents retire worry-free in a condo overlooking the Atlantic in South Florida. And of course, I've been able to make my own retirement a reality at age 52, instead of the fantasy it was just a few years ago. When you take the time to understand the answer, you may kick yourself for not trying it sooner. I know I did. See, over the years, I don't think anybody has done more than Porter Stansberry to get the word out about the answer. He hasn't been even remotely subtle. For example, back in 2013, he told readers, "If you begin to do this, I promise you'll buy far fewer stocks. You'll make a lot more money as an investor, you'll take dramatically fewer risks, and you'll produce way more income." In 2015, he said, "When you find an investment that can double your money and pay you annual interest of 10% or more, it's hard to imagine why you'd ever want to do anything else." And just last year, he said that the answer will make you far, far more money than you will ever make buying stocks. It's also vastly safer. It took me way too long to sit up and pay attention to these messages. And I have to admit, I haven't given up investing in stocks entirely, but I'm getting close. And with this bull market nearing an end, my only focus going forward is putting more and more money to work using the answer. It feels great not having to worry in the least about how or when the market's going to crash or what will happen to me when it does. And to spend less time on my investments and more time trying to raise my golf game to a decent level, or planning trips to visit my kids up and down the East Coast and visiting wineries with my wife. Anyone can use this technique. It just takes the courage to step out of your comfort zone and try something new. And most people will never do that. For years, I was one of those people. Even though I used to work on Wall Street, I really didn't understand the answer myself until Porter showed me how it worked. Like everyone else, I believed the one ironclad rule of investing was that returns and risks are welded together. They go up and down together, and that's it. Nope. I'm living proof that it's possible to see 15 to 20% annual returns, sometimes much more, with an investment that's less risky than stocks. And even though I've been successful, I'm not special in any way. Heck, I'm a former stockbroker, and I've still made just about every mistake you can imagine with my own money and my family's before I finally discovered the answer and retired at 52. See, I learned the hard way to be humble about investing. and skeptical about supposedly can't-lose ideas. I barely made it through the last two big crashes. I'm sure you remember 2000, when the dot-com craze came crashing back down to earth, taking virtually every imaginable investment with it. At the time, I was a retail broker for a major Wall Street firm. I watched my colleagues kept telling clients to buy the dips right down to the bottom, and even keep pushing risky IPOs when anyone with a brainstem could see it wasn't a good idea to be fully invested. We got paid on commissions, so the only way to keep getting paid was to give increasingly bad advice to the folks you were supposed to be helping. I hated watching it, and I refused to do it. By the time the market bottomed, I'd left Wall Street forever. The crash had taken not only a huge chunk of my savings, but my income as well. I had to pull my kids out of private school. They were incredibly good-natured about going back to public school, even though it meant leaving friends behind. But it broke my heart. And they weren't the only ones depending on me. My dad was a retired teacher, living on his investments and his Social Security check. There was no way I was going to watch him be forced to go back to work. It was right around then that I discovered Stansberry Research. I'd never seen anything outside of Wall Street research up to that point, research that was secretly tilted towards the firm's big investment banking clients. Within a few years, I was following so many newsletters that it only made sense to join the Alliance and get lifetime access to all of Stansberry's research. I paid a tiny fraction of what it would cost you today, and even at that price, it was a huge stretch for me at the time. But the timing, as it turned out, couldn't have been better. It was 2008, the second big crash. The market fell nearly in half. The people that mattered most in my life were still turning to me for answers I wasn't sure I had. My children's college savings couldn't take another devastating hit. My folks' retirement was on the line. And my wife and I were now starting to think about our own retirement. With the market crashing, it looked like we'd never get there. Porter's ideas helped me stay afloat, but I needed a breakthrough. It felt like I was running out of time. And that was when I discovered the answer. When I emailed Porter recently, I told him that my Alliance purchase was by far the single best investment I've ever made. I think it's conservative to say it's paid for itself 100 times over, but it's almost completely because of one idea. The answer involves an investment market you've probably never touched, or even realized was available to individuals. But it's not some fringe thing. It's actually far bigger than the stock market, and vastly better for folks who are retired, or hoping to retire sooner than they thought possible, and who isn't. Better than stocks, better than government bonds, better even than real estate. As good as all these investments can be, this one beats them hands down. See, in this market, your investment is backed by strong legal guarantees. You know, when you invest, exactly what you're going to get back and exactly when. The risk isn't zero, nothing in the markets is, but the returns are so consistent and so reliable that many retirees who've learned about this approach simply plan their future living expenses by timing these payoff dates well into the future. What happens is this. When you make an investment, you immediately start receiving a dividend-like payment twice a year, except this payment is your legal right. It cannot be cut or suspended like a stock dividend. Oh, and with Porter's approach, the dividend yield is often in the range of 10%, 15%, or more, nearly 10 times the yield of the average stock. In fact, a 15% annual return is by itself better than most people ever do in stocks. But that's just the beginning. You're collecting this money while waiting for the exact date on which you can expect to walk away with your original investment plus a big capital gain. Sometimes 50%, sometimes 100%, 300%, or more. But again, you know the amount and when you'll get it at the time you make the investment. Then you can do it all again. Since I started doing this, I've been making returns that are not only better than stocks, but more predictable and with less risk. For example, from January to October of 2016, the stock of a company called Rent-A-Center fell by about 9%. But my investment in Rent-A-Center, which had nothing to do with the stock market, returned 20% during the exact same time. In early 2017, same thing. Shares of W&T Offshore plummeted by 16% in 2 months. But my investment in W&T, outside the stock market, gained 3%. It's an annualized gain of 18%. This is why I don't worry about money anymore, ever. I rarely trade stocks or options. I've never had a losing year with these investments, and I have zero worries that I ever will, even when a severe bear market inevitably arrives. If you're worried about a market crash, all I can tell you is you're wasting a lot of energy when you could be doing this instead. A crash will barely affect me. If anything, it may end up making me wealthier. By the way, I manage this portfolio in about an hour every month online. Today, I hold similar investments that pay annual income of 6.6%, 8%, even 11.3% just in interest alone. All while I'm also waiting for capital gains as high as 34%, gains that are virtually guaranteed to me by law. And I'm expecting these capital gains to get much bigger in the coming years for a specific reason. Porter's team has already recommended a more than 700% gain with this type of investment. So what is the answer? By now you may have guessed. I'm talking about a unique strategy involving the bond market, but not treasury bonds, and not those bond funds that are supposed to be the safe option in your retirement account while providing basically no return. Nothing like that. Instead, this strategy involves individual bonds issued by some of the biggest companies in the world. You can buy and sell these just like a stock, right through your brokerage account. In essence, a bond is a loan to these companies, and always for a specific period of time. You always know the exact date you'll get paid back. Your loan is backed by a legal contract, a legal obligation for the company to repay you the full amount, usually $1,000 per bond, on that date. Plus interest, of course, to make the arrangement worthwhile for you. The big players in this market are institutions like banks, insurance companies, and pension funds. They do this all the time because it's a huge market, again, bigger than stocks, and they depend on the rock-solid legal guarantees. Most people don't know that individual investors can tap into this at all, but you can. It's a dramatically less risky way to make money with some of the best companies in the world. But that's not the whole story. See, Porter has unlocked a unique secret involving these bonds, a way to buy them for a fraction of their true contractual value, at discounts ranging from 10% to 70% or more. Using this secret, you can buy a $1,000 bond for less than $1,000, sometimes far less, get generous interest payments for several years, and then get the full $1,000 back on the date in the contract. For example, one of the first trades I personally made was buying a $1,000 bond for $171.50 back in 2009. 3 years later, I collected the full $1,000 face value for each bond, as promised, for a 483% capital gain. Plus, I collected over $300 of interest on each bond I bought. That's 175% of my purchase price in interest payments alone. This is the approach that Porter is talking about when he keeps saying there's a way to make more money than stocks and more income and do it more safely. When he keeps saying he thinks readers should quit stocks forever, this is why. I didn't make this message to keep it a mystery. I made it to tell you that this is how I retired at 52 with very little effort. And I genuinely want you to try it and see, because my results are not special in any way. I understand if you're skeptical. I was too. After all, why would such a transaction be possible? My best advice is to let Porter and his team explain it in detail on the next page. After all, I'm not the expert. I just know that if I can do this, anyone can. With the help of Porter and his team, I found out that it's as easy to buy these bonds as it is to buy stocks. Really easier in the long run, considering I do less trading with fewer positions and don't bother with watching the market. I do it all online. Just like stocks, I can get my orders filled right away. Or I can set the price I'm willing to pay and wait for the market to fill it. There's no hurry with this type of investment. A few days or even weeks will rarely make a lick of difference to my long-term returns. And I don't have to sit at a computer and worry about trade wars or market crashes or the inverted yield curve, whatever that is. I know my investments are protected by law. I sleep like a baby at night. I spend an hour or two a month monitoring my investments instead of an hour or two a day. And that's why I'm so psyched to share this idea with you. As an Alliance member since 2008, I feel a kinship with Stansberry subscribers. I asked for the chance to share my story with you, if only to share one simple detail. This really works. Now, I know you've read Porter's words on this, but at the end of the day, Porter stands to gain financially from you buying his newsletter. So I wanted you to hear it from me as someone who has benefited from following Porter's advice. This really works. You may or may not give up buying stocks forever, as Porter suggests, but I'm certain you'll do better as an investor by making this part of your game plan. And it's not rocket science. If you can go online and buy 100 shares of Microsoft, you have everything it takes to invest in a bond. Even if you've never done it before, like I hadn't until a few years ago. I hope my story helps you overcome the fear or the doubt that you can do this. Believe me, you can. Like I mentioned at the outset, Stansberry took an unusual step by letting me speak directly to you today. But our agreement didn't end there. I asked them to arrange something special in exchange for my sharing my story. See, as an Alliance member, I automatically had access to Porter's research on this idea. I got the answer essentially for free. I didn't have to wonder if it was worth it. I read it, I was convinced, I tried it, and it's going to be the primary way I invest for the rest of my life. But look, Porter's top shelf research on the answer is pretty expensive. And he's said publicly that he's had a hard time selling it. From my view, from the inside, I know this. It's a bargain at any price. You could literally recoup the price of the subscription with just a trade or two, even at the lifetime subscription price. But I saw that Porter recently offered a steep discount on this research, and people still weren't convinced. So that brings me to my second agreement with Porter and his team. In short, they agreed to allow access to this research, called Stansberry's Credit Opportunities, at an all-time low price. I'm talking miles below anything they've ever done before. This is a one-time deal. I wanted them to make it a no-brainer so that everyone can do this like me. If the price today is still too big a hurdle, this probably just isn't suitable for you. I doubt you'll ever do it, but I hope you will, today. I can't stress this enough. Even at full price, this research is a bargain. That's not what the companies agreed to today, not even remotely close. On the next page, you can access a price so low, I think you'd be insane not to at least try it. You have nothing to lose and a lifetime of financial security to gain. When you click Tell Me More below, you'll see a written message from Stansberry research publisher Brett Aitken, including this special offer and a lot more detail about this strategy. You can read everything over and decide for yourself. All I can tell you is this: if you're on the fence, come on down. The only regret you'll have is not trying it sooner.